Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Hi, everyone. How you going? Thanks for joining us on the podcast today. It's interesting times to be in property and property investment. I always say it irrespective of what's happening, but now more than ever before, I think there's some great opportunities starting to emerge in the market, depending who you listen to. Some commentary I've heard, you've had some very reputable property demographers and economists saying, yeah, things have started to turn a little bit. And I'm also getting anecdotal stuff coming from auctioneers that they're sort of calling markets are turning, particularly in Sydney and Melbourne. Watch this space. It's a really interesting journey to go down investing in property, what and where you rely on in terms of when it comes to how to make more informed investment decisions. And my recommendations would be just don't lean on data to give you everything that you need. You need to balance it up with on the ground truth. So we've had some good podcasts recently about this, so go and tune into it. But, you know, as this government has sort of gone through its ups and downs, and we've affirmed that the coalition government is in power and will be for the foreseeable future for at least the next 3 years, whether it's 2 terms, no one knows yet. A lot of the policy decision makers and rhetoric coming out of both parties during the election was a lot of it was property related, and some people called it a referendum on property, the last election. Whether you subscribe to that or not, that's your point. But what you find in property, and you know, this came out running up to elections, they put some new incentives in place for first home buyers to try and get them into property markets. There was always some sort of incentive to try and either stimulate markets to get them moving in a particular direction, or if there is some challenges facing any particular type of buyer, owner, or some other minority demographic in Australia, the government looks to intervene and champion that. And one of them is it's around the NDIS, which is National Disability Insurance Scheme. Now, if you're not aware of this, we're going to have a bit of a chat about this today, and there might be something that you might not be aware of as a property investor. Is there a scheme in place to try and facilitate people who are leaning on NDIS to get them into homes? Here to have a chat with me about this is John Manciamelli. I think I got that right. John, how you going, mate?
Hey,
you well?
Yeah, well, thank you, mate. Thank you. Well said.
So NDIS, I'm sure everyone's heard about it, the acronym. They probably don't know it actually stands for the National Disability Insurance Scheme. People are chatting about this a lot in the elections. Can you just fill in our audience about what the NDIS is?
Yeah, thanks, Phil. The NDIS is a program that has bipartisan support by both parties, where what they're trying to do is assist disabled Australians to live a better life. And it's a $22 billion a year program, bigger than Medicare. And so what they're trying to do is shift these disabled participants away from a welfare state into an environment where they can use their funds and choose how they really want to live and go into their own private accommodation instead of institutions. So as an example, there's over 6,000 young Australians living in retirement villages. So they're 20 years of age and living with 80-year-olds. And, you know, the mental state that they're in is obviously pretty bad. So it's a great initiative. It's there to help disabled Australians or people who are less fortunate than us. And for us property investors, it means that there is an opportunity for you to look at assisting these disabled, or they're called participants, into creating beautiful, beautiful homes just like normal people, and getting a return on it.
So this, I think, sort of straight off the top of my head, sort of similar schemes. You had NRAS back in the day, and that's still going up in Queensland. Then even think about stuff like defence housing, where, you know, it's a property investment scheme which involves supporting another, you know, segment of Australia, and that is our Defence Force personnel. So stuff like this exists to actually the context of trying to get more Australians who may be leaning on the NDIS into their own property to make sure they can have a more fulfilling life. And I think that's a great purpose and great cause, and something which is a motive to all Australians, I think, irrespective of what side of the political spectrum they sit with on. So this NDIS scheme, so essentially they're saying, government's saying, we need to build properties that will suit people on NDIS, and because of that, I imagine there is some particular, you know, components, sophistications of the property make it NDIS relevant, so it can support people with a disability. Yeah. But you can invest as an Australian into these properties. Yeah. And that's what we're chatting about today. So how long has this scheme, I guess call it a scheme, been around for?
Look, they started talking about it about 5 years ago, and it launched in earnest in 2017, and it's really starting to get some momentum now. But I'm surprised it hasn't really hit the mainstream media. Yeah. And I
haven't spoken much about it at all on this show. So, you know, it's not something which is top of mind.
So the government has got its own arm where it's buying and refurbishing properties, but what they really want is people like you and I to get out there and start building properties that have got NDIS specs. So, you know, the shower screen, you know, opens right up so you can get that wheelchair into there. And so, you know, we want to get these young Australians, as an example, out of these retirement homes into an environment where they can live normally. And that's just a wonderful return.
Yeah. So how did you find out about it? What's your sort of connection with this?
I'm a property investor that just happens to be a mortgage broker. So
what are you first? A mortgage broker that become a property investor, or the other way around?
I was in operating theatres, and normal career progression was to become a mortgage broker. So so I had 7 properties at the age of 32 and decided finance and property was my thing.
Okay.
And so as a mortgage broker, I'm always, that specialises in investing, I've always kept an eye out for things that can help my clients. And so 18 months ago, I got my head around this and I went, this is just too good to be true. So I really looked into it. And I thought, okay, well, if the federal government's behind this, then it bodes well.
So what's the federal government doing? So the intent is to actually make more dwellings, which NDIS spec to actually try and get Australians into these homes, which is great. Yeah. What happens from there? What do they do? They provide a rebate, or they give you guaranteed returns? What's the system? All
right, so there's kind of 4 players. You have the federal government as your first player. The second one is the disabled, and they're called participants. Then the third player is the provider. And the provider is a business that's set up to help the disabled. So they will have in-house physiotherapists and social workers and so forth. Now, those social workers will then create a plan for those disabled or participants. Part of that plan, or a very large part of that plan, is the housing. So if you want a brand new home and you're disabled, then you need to make that as part of your plan. And then you've got to go off and find someone who will create that house for you. So say you've got cerebral palsy, okay, and you need a specific type of house. Then there are institutions and or individuals that will build a house that will help those people with cerebral palsy. So I just love it. It's just, talk about social investment. Like, it's just a wonderful social investment in Australia, and the returns are quite amazing.
Yeah. So there's 4 stakeholders. You mentioned it's the government, it's the participant, so the person that needs it, the government who will potentially fund it, and the other 2 were, sorry?
The providers.
The provider.
Okay, so the provider is the business that sort of puts everything together. And then the 4th one for me is the person that's going to help you find the block of land and then build it.
Okay.
So you need someone who's going to be able to put the tenant and the property together.
So like a facilitator.
Yeah.
Okay.
The buyer's agent, if you like.
The buyer's agent. Okay. So what are the rules from the government? What are the rules around the locations of these particular houses? So we're talking about building new properties. Do they want them everywhere? Imagine they just want to embed into the community, right?
Yeah, and that's a really good question, because obviously the disabled are everywhere. Now, first thing is there is just not enough demand. All right, the data that I've got here says that, we need, over the next 5 years, we need 16,000 new dwellings. And last year, in the year of 2018, we only had 700 built.
Okay.
So there's a serious undersupply. So as an investor, what you are looking for, though, is those areas that are going to give you a good return. So building a brand new house in Melbourne or Sydney may not give you as good a return as building a brand new house in, say, Southeast Queensland, because the land is cheaper.
Yeah.
All right. So there's that fundamental issue that you want to perhaps address when you look at the NDIS. The second thing that you might want to consider is that there are 4 levels of disabled or participant payment plans. And the ones that are going to get the most payment, if you like, is the ones that are highly disabled. Okay. So there are people who can function relatively normal and they get the least payment. So with this NDIS and as a property investor, you're trying to marry up the payment program in areas that are highly undersupplied, which is basically all over Australia, bar 2 at the moment. So Newcastle and Lake Macquarie at the moment, there is an oversupply just slightly. Okay, but at the moment, as an investor myself, I'm looking into Southeast Queensland because I can buy a block of land for 150 grand and then build a home for, say, I don't know, 300-400.
So I want to get into that, I guess the strategy around identifying a block of land and what you build. But before that, I just want to cut to a quick break. Welcome back, everyone. We're having a chat about NDIS. John, now, you're chatting about the need for these properties, that there is a real sparsity of it in Australia right now in terms of getting people out of, younger people potentially, out of retirement homes into new build properties, which are geared for servicing their particular needs with their disabilities. You spoke about before the break moving into Queensland yourself personally and looking at how you can go about acquiring a block of land and building a house on it. Is it easy? Are the lenders, being a mortgage broker, are the lenders open to funding this sort of stuff yet? Have you heard much about it?
No, that's a really good question. The lenders are still very open. So there are 3 things that I would say you wouldn't want to do it for the following 3 reasons. And the first one is the finance. It's very hard at the moment to get it because the lenders themselves don't understand it. And I'd imagine some of the lenders will freak out because they don't want to kick out the disabled and end up on Today Tonight. So there's going to be that element. As a mortgage broker, though, I have found solutions around it. It's not easy. If you talk to an everyday mortgage broker, they won't be able to help with that regard. But yes, it's early days, and we're going to need time before the banks get their head around it. I remember the days of NRAS when it first came out, and the banks didn't want anything to do with it, and slowly it came around.
Yeah. So going back to the mechanics of it, so the government says we will fund, they will support the principle of giving Australians with disabilities greater quality of life by putting them into their own properties. And I think no one would argue that that is a bad thing. I think it's a good thing. For the property investor, you identify a block of land where there is a need for this sort of stuff and build a house which is spec'd up for people with a particular disability. And I imagine there's some specifics about different disabilities need different types of equipment. How does the government funding come into it? Do they pay you directly the rent? Is that how it works?
It goes to the provider.
Yep.
And then the provider pays the disabled. So say we've got a house with 4 cerebral palsy participants in each room.
So we're talking about share houses as well.
If you want.
Yeah, okay.
Yeah, you can do 1-bedroom apartments, or you can do 4 or 5 bedroom houses.
Okay.
I'm preferring to buy a block of land and build. I just like land and being the wog that I am.
Fair enough. You can say that. I can't even pronounce your name properly. So
it's all good, mate.
Manciamelli.
Yeah.
There you go.
So the idea is that the 4 participants will sign a lease, with you.
Yeah.
And then they get the $40,000 a year going in each time. So you get a very, very large share of that.
Okay.
And the idea is that you also have a caretaker inside the residence that they can live 24/7. So there'd be a number of people coming in doing shifts, helping those disabled. So the mechanics of it is that the money goes directly to the provider. It's paid to the disabled. The disabled then decide what they want to do with it. So if they want to learn to become a computer programmer, they get a teacher to come in and help them with learning how to become a computer programmer. And then there's obviously the housing component. So that disabled or participant then chooses that where they want to live. So they're no longer living in these government institutions that are run down, or in hospitals, or in retirement villages. They can choose, just like you and I, where they really, really want to live. And if you can come up with a house that's appealing to them, then you've got a great tenant. If you've got no house that's not appealing to them, then they're going to leave just like any other tenant.
So the provider, so essentially they're the aggregator. They pull all the money and then they pay it as required. Like in a retirement world, or someone like who's getting aged care benefits, there might be like an Anglicare or someone actually receive the money, then they pay out the providers and the users of the services. Okay, so you have a bunch of people living in a house. The provider receives all the income, and then they do the transactions around supporting the person that, in this case, has a disability. So they would pay you, Mr. Property Investor, the rent.
Yeah.
So four times on that basis of whatever it is, which is and are the rents on these sort of properties, are they above market? I guess there is no market because they're quite unique. But how do they gauge that or range that?
You can go to ndis.gov.au and you can see the rents that they're paying, but it is obviously significant because they need to have, the government's trying to get, it's ironic because you look at that $550,000 property getting $100,000 a year and you think, wow, that's a lot of money. But it saves the government a lot of money getting them out of that hospital or that retirement village. And so it is obviously above market rent. So back to the question around finance, the banks will only look at a 5% return rather than the 10 or 15% that you're seeing with NDIS at the moment.
So the government funding is the money that they give to the provider to support the person with the disability. Are the government sort of really pushing this particular incentive quite hard? You're saying that the idea is to get them out of a institution into a house. Has there been any sort of negativity around that from someone that might have them?
Yeah,
that's probably worth having a look at.
Yeah, I don't know. It's early days, but I know the government has funded it. But it's a quagmire of being bureaucracy. The ndis.gov.au is just a quagmire of a website. It's just so much information.
Does it tell you anything? Because I know I've looked at aged care stuff before. It's a nightmare. You can't get an answer.
It is a nightmare. So I've created my own landing page that's very property specific, taking information out of that ndis.gov website and created it. So look, it's early days, but it's pretty encouraging. It's I haven't heard anything yet. Not to say that it won't.
Has anyone done it yet? Has anyone actually done a new build property?
Yeah.
What's the secondary market like for them? Is anyone transacted? No one knows yet?
Yeah, too early. Yeah. Too early to tell.
So the question is...
but on that, like when I build my home, my 5-bedroom home, I'm doing it so that a normal family can move in there. Okay. So the idea is that, they might see a grab rail in the shower, but it's not really a big deal. The toilet will look different because it moves. Imagine the wall. The toilet moves left and right so that the wheelchair, you can like
slide the toilet.
Yeah. So if you can only get up out of your wheelchair to your right, you can do that. So, but the thing is, if it doesn't work out for me, I can just pull out and go, I'm just going to put a normal family in there.
Okay. How much more does a bill cost because it's sort of spec'd for people with disability?
Look, I don't know. It depends on the builder you choose and things like that. But I will say this, one of the reasons you don't want to do it is I'm anticipating the value is to not understand this. It's too early. So say that $550,000 house, I reckon the values are going to come in at 500.
Okay.
So it's not for you if you're freaking out on val shortfalls. If it's not for you if you're a first homeowner. If you don't have equity, this is just not for you.
So the question I was going to ask then is, which investor at what part of their cycle would be should consider an investment like this, do you feel?
Anyone who's got the cash to support a val shortfall and or anyone who's got equity.
Okay.
All right. So with my clients, what I'm doing is just making sure there's plenty of buffer, explaining to them that these are the three downfalls. Val shortfall potential, I don't know. It could happen and just assume it will. The second one is finance is going to be hard. And the third one is we don't know what we don't know. Despite the fact that very legal, smart people, professionals have got involved, the federal government's got involved, this is so new that we just don't know what we don't know.
It is pretty early. And I want to ask you about the funding and financing around this, but before that, just cut to a quick break. So, John, you were chatting beforehand that banks, lenders at the moment don't really get the opportunity around this particular thing, and banks are risk averse by their nature, and they typically need a bit of time to sort stuff out. For anyone looking at a scheme like this, getting involved in the NDIS and providing housing through that, how can you fund this stuff? What sort of the creative stuff are you doing at the moment with your clients?
So we're typically presenting a two-part contract, one for the land. So you bought it for $200,000, and then a building contract where it's a five-stage drawdown. So what we're doing is submitting it to the bank and not making any mention of anything. All right. So it can rent that $550,000 property. Will rent for $600 a week. That's what we're saying.
Yeah.
All right. Now, if the mum and dad investor ends up getting some tenants, then we're going to be able to show in 12 months' time the disabled cash flow. And, refinance it. As long as we've got 12 months worth of history, then the banks will start looking at this going, okay, well there's a bit of history here. We think we know what we're doing here now, but it's the early days. So I've gone to some private funders who get it and who are a little bit more creative, and they've really given me the go-ahead. So, instead of, I had one come in the other day at 8% interest, but to that client, I said, let's just sit there for 12 months, then go back to a tier one lender and move forward. But I've got another client where we're submitting it into a normal lender, but not saying anything, and it's all looking pretty positive. Okay.
As this scheme evolves and some evidence comes down the line and people can start to see that it may or may not work, the lender's appetite towards it may increase a lot. But what sort of numbers are getting banded around the returns? You're saying this is a cash flow play as much as anything, and for a lot of people in their portfolios, cash flow should be absolutely key, but for some people it's more important than others. If you have a bigger portfolio, you're looking for a blended portfolio, what sort of returns are you looking to get on these sort of things?
So let's use a hypothetical $550,000 house, 2 bedrooms. If you only rent 2 out of the 5 bedrooms, you're getting $1,346 a week. That's like $70,000. And then if you can rent out 4 bedrooms, that's $1,942 a week. That's $100,000 a year.
Yeah.
So this is not a capital growth play. This is just purely cash flow. This is not buying in suburb ABC and you're going to make $200,000 in 10 years' time. This is genuinely, you buy in the suburb, do the right thing by the disabled, and then you're going to get funded by the federal government through the participant, and you're going to get strong cash flow. So I'm setting this up in 2 ways with my clients. The first one is those clients that want to pay off their owner-occupied property faster. I said, let's go up and buy some cash flow properties like this one. Let's get 2. We can get 2. That's net to you of $80,000 a year. And you can throw that into your owner-occupied loan.
Okay.
All right. And then the second one is those people looking to retire who either have the cash, okay, who are looking for a strong income stream. So the most recent one that's come out is we're building a duplex. We've got 3 bedrooms down one side, or the dual keys, I should say. They look like a normal home from the street. 3 bedrooms down one side, 2 bedrooms down one side. It's $650,000 and it's $155,000 a year in cash flow net.
Okay. Well, I'm sure those numbers, if you're an investor, you can start sort of working them out. But to your point, it might not be for everyone. When it comes to the provider, so going back to the mechanics of this, so you get down this path, you find a block, you build a house on it, which is purpose-built for people within the NDIS. Who chooses the provider you use? Is it you choose the provider?
This is where it gets really difficult because no one really knows who to turn to. Who's a provider? Like you can't Google provider NDIS. There's maybe 1 or 2 that may pop up. But do they specialise in SDA, specialised disability accommodation? Because some providers just want to have 10 staff that are social workers. That makes sense. So That's hence why it took me 18 months to find the right provider who can link up with the right buyer's agent that I can trust.
So the provider receives the money from the government. So the provider, I imagine, needs to be endorsed or legislated against it.
Yeah, they have to be certified.
They have to be certified. So how do you know whether or not a provider is a good provider? If they've got certification, imagine.
I have no idea.
Yeah.
It's a good question.
So early, is it?
So early, yeah. So I'm sure if you dig around and do all the homework and stuff like that, then yes, you'll eventually get there. But I've found one. It's so far so good.
Yeah.
Willing to hang my hat on him.
Doing a good job. Yeah, well, going back to the point I made, the government likes to develop schemes like this, and I think the intent is good, and I think the rationale for it is good. Like I completely believe in getting the whole sort of backbone of the NDIS actually, so us as a nation can better provide for people with disabilities. I think without a doubt,
it's an awesome idea.
It's an awesome idea. I think it's a great initiative, and it's good that it's bipartisan. Both sides of government are sort of behind it because it has been neglected somewhat over the years past, and finally I think someone's shaken the government and saying, hey, look, we've got to do something about this. It's not good enough and we should be able to do better. So that's all cool. But it's the details that I'm still sort of going, okay, I've got to see how this plays out, right? Because any new scheme
it's the government's letting the private sector get involved.
Yeah.
They're saying...
Which isn't a bad thing. Normally it's a good thing.
That's a good
thing.
thing.
The right private sector get involved.
Yeah.
We've had problems before, like, schemes like that, or the pink bats or whatever, which was absolutely a train wreck, right?
But this is a good one because it's allowing the government to go, look, fund this. You private sector worked it out. You work it out. Now, there are institutions who are making businesses out of providing accommodation for the disabled because the returns are so good. So there are businesses with hundreds of millions of dollars sitting there going, you know what, I'll just build these in cash. And the cash flow is just so strong. Well, I think it hasn't come down to mums and dads yet.
No, well, I think the government understands. You go back to sort of using aged care as a paradigm. They want to keep Australians in their homes longer, as much as possible, and they will fund Australians staying in the home through old age rather than chucking them into a nursing home or whatever. Right? They much prefer that. So it's a bit of a reverse of this, is making sure that people with disabilities can stay in their home and have quality of life as much as possible, and that's how they choose to fund it rather than giving money to nursing homes or whatever. So look, this is still relatively new to me, and I might have a bit more of a dig around it, like most things, and I think you've alluded to it. There's not that much information about it right now.
If I can plug my website and you can have a look at it, because what I've done is I've taken all the videos and the actual disabled talking about their experience and moving into their brand new apartment. There's videos on my landing page, hunterwood.hpa.im, and in there you'll have all the stats of where to be doing this in Australia, because there was some information that came out and said, certain pockets of Australia are seriously undersupplied. Like, for example, the Gold Coast. And I'm not suggesting the Gold Coast. Please don't go out and buy block and land the Gold Coast. But there was very, very few places built there in the Gold Coast, and there's 399 places that are still needed there. And Brisbane South, there's 233 place shortfall in Brisbane South. So there's some really good areas, whether you want to stick to a main city and just spend a bit more money, or you can go into, say, Mooloolaba in the Sunshine Coast and get a cheaper block of land and so forth. But, first in, best dressed. You're the one that's going to come out with the most in-demand property. There are 22,000 SDA ready to go participants. So I'd imagine that as soon as you build a 5-bedroom home that's got all the specs that the NDIS has required, then there's going to be people lining up to try and get in there because they want to get out of living in a hospital or a retirement village and stuff like that. So
if you're tuning into this and you're going, oh, this sounds all right, I'd like more info, and you mentioned that website, what boxes do you need to tick, do you think, as a property investor to make sure that you should even consider this? And as you said, you're not a first-time investor.
Yeah. I think if you believe in positive cash flow, this is going to be right up your alley, and it warrants the investigation. All right, that's the main thing. If you're a capital growth investor, then this is not the play. But it certainly is if you're just saying, I'm 10 years away from retirement, this looks like it's going to set me up nicely. Or if you just like having all this cash coming in and are willing to understand those 3 risks. Val shortfall, finance might be hard to get, and we just don't know what we don't know yet when we're housing the participants, the disabled. But I'm willing to have a look at it because all I know is that the federal government is behind this.
Well, at least you've got 3 years as well, right? They're going to change their mind tomorrow.
Well, that's a great thing, Phil. It's got bipartisan support. Yeah. It's Bill Shorten is now the shadow minister for the NDIS.
Yeah.
So it's a serious thing. They're both supporting it. And the reason is that at the end of the day, they're saving a lot of money by rolling this out.
Yeah. Well, hopefully the idea is that the government saves money, so it means they take less tax off us. And but I think most importantly, people who are recipients, the participants within the NDIS, get a better quality of living. So I think that intent is good. I'll have a look, mate. John, thanks for coming on and sharing what is a relatively new thing, and the fact that you're sort of exploring into it, and it might spark some people's interest to know there is something like this out there. And my recommendation would be to really stress test whether or not it's the right time for you to look at something like this. And I'm not making a recommendation either way around NDIS. I'm just saying that as with any potential government scheme or any type of property purchase, it needs to fit your portfolio at any given time, both today and tomorrow. So that's what I would say. John, thanks for coming on again, and we'll get you back in. When you've done some of this, let us know how it goes, and you can come and tell us all about it.
That website's got some videos of actual participants who've moved into their homes, and it's just lovely. Like you can see the joy in their eyes. You can see they're getting on with their life. And I don't know. This is a social investment that is just King Kong for me.
Well, I think a lot of that will resonate to a lot of investors as well, to actually have a purpose outside of just being a property investor. If you can get upside benefit of providing a better life for someone, I think it's good merit. Thanks for tuning in, everyone. Remember to check out smartpropertyinvestment.com.au. If you're not yet subscribing to our daily morning newsletter, so the first to know what's going on in property and property investment right across Australia, including the NDIS, smartpropertyinvestment.com.au/subscribe, or it's also all over social media. Remember, if you're listening to this on any of the podcast players, just press the subscribe button so you get every new episode as it is launched. We'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs, and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.